quarter three marketing meeting for all of us. I'm going to cover the crop section. Just to give you an idea kind of what we're going to look at here, we're going to spend kind of briefly on the crop progress. We're going to look at supply and demand. There's some numbers that we're kind of waiting to see where we're going with this. August is going to be our first survey estimates that we get from the field for crops to kind of see where we're looking at on the supply side. And the last thing that we'll just talk about briefly is some pricing strategies to consider right now for corn and soybeans. So looking at this, I know this says May 28th. I did not forget to update this slide, but what I wanted to look at here is to kind of show you, this was from our last marketing meeting that we had in, I think it was June. And this is kind of where we were standing when it came towards this May 28th timeline. And if all of you remember, April was extremely hot for us. Very little rainfall that we were seeing, below average. And then once we got past that time, kind of hit into May or in June, what we saw was rain couldn't stop. We couldn't find a day that it wasn't coming in some places. And then now we've kind of picked back up. We've dried out a little bit, but then we also been having these random gully washers that we're seeing in random places throughout the state here. So rain's sporadic now, but this is where we stand as of July 30th. So a lot of the drought that we had been seeing, that moderate drought, it has disappeared pretty much entirely from the state of Tennessee. Now, again, we don't necessarily move the needle when we're talking about supply for corn and soybeans necessarily when we look at the U.S. as a whole, but we still do have an impact. And so what they're looking for more right now is in the Corn Belt, those Midwestern states too, is they're looking to see what the weather is doing right now when they're getting ready to start surveying these estimates for yield. To give you an idea, I said we would look at the crop progress here, and what this is showing is crop progress for corn. Looking at this, and we compare this, we see the red line is 2026 right now. And if we look at this as a national whole, 2025, we were somewhere around that 70% mark for corn crop that was in good and excellent condition. So we do see that this year, given where weather has been, again, we were looking at June was above average rainfall, below normal temperatures, and then it turned, looking at this, and this was for those Midwestern Corn Belt states. Then it turned into July where it was below average rainfall and then above normal temperatures. So weather has really been the story driving what these yields are going to do for the U.S. as a whole. Now, I do want to point this out though, when talking about this, this isn't by any means saying that we're going to have a bad crop this year. We look here, we're still 2026, we're above 60% of this crop national as a whole being in good and excellent condition. We see very little that's in that poor or very poor stage or condition, percentage condition right here. So even though we're below what we were in 2025 as far as where our condition is, we're not saying that we're going to have a bad year as far as what the yields are going to show. This is painting Tennessee. We do have a little bit of a different story from looking at the national level to specifically our state. When we look at the percentage of the corn crop in good and excellent condition, we are actually right around that 80% mark, what we're looking for our crop. And a lot of this is that, yes, we've seen extremely hot and dry weather, but we've also kind of received rain when we needed it during specific time periods. And one of the things I wanted to point out in this was looking down here at the bottom, the progress where we were. If you're looking at this, we had, before we even hit May, we had 80% of our corn crop already planted. We were well ahead of the typical trend line that we see here for 21 to 25 of what percent of our crop was planted by that May time period, by the first of that May. And so we see, again, emerged came out. And what we're looking at here, silking, that critical production stage to know where yields are going to go. Pretty much all of ours has already hit that stage here in Tennessee. And has as well for a lot of the US too, but there's still some room there for the national level. Looking at soybeans, very similar situation again as looking at it national wise. Uh, 2026 percentage in good and excellent, somewhere between that 60 and 65%. It is again below that 25 mark where we were hitting somewhere around 70%. But again, the story behind this is that even though we're below those percentages of what we were last year, still very little in our beans as well that was this poor and very poor percentages. Tennessee, same story again, 2026 percentage. We're around that a little bit above 70% mark for good and excellent condition. It's still the same story on this. We were able to plant a lot earlier than we have in previous years and our previous averages that we've been seeing. So what does this look like as far as our supply and demand? This is from the July WASD report, World Ag Supply and Demand Estimates. And just some things that I wanted to point out here. Again, we're waiting for that August 12th for those initial estimates to come out. I was reading something the other day is that when that WASD report comes out, the estimates that they're giving on bushels per acre, what they estimate for the national average, since 1991, they've been they've given the estimate 17 times. It's been higher than what they estimated. 18 times it's been lower. So we're just kind of it's an estimate, but we still won't have there's no guarantee that that's what we'll see until we actually get in there and start harvesting. But they did reduce from last year, they did reduce bushels per acre just because we have been kind of seeing this tug of war with prices and where things are going. One of the big things again, exports. We have seen some decline in exports for our corn a little bit. This is more of just the time period, time transitions of what we're seeing and everything. But we're not really, as far as prices, we are up from last year. But again, this doesn't account for basis or anything like that. One of the things that I did want to point out is in soybeans, is that our soybeans have bounced back a little bit with our exports with China. China has committed to purchasing new crop soybeans, about 5 million metric tons right now. So our rebound in exports has helped sustain a little bit of prices in our soybean markets. Crushing, we see here that we're again up in that area. We've got record level demands for crushing. And so that's helping again, even though our weather's kind of dependent going back and forth on where our yields are going to be, what's going to happen this go around when we start getting these survey estimates from the field. Our demand is also helping kind of drive these prices, but it's still, we're just kind of playing a game right now of which one's going to impact more. Is our demand or our supply, what's going to happen at this point? Looking at profitability, I did look at Aaron's slides from last year when I was looking over this, and we are in a little bit of a different scenario here. As last year when we looked at this profitability slide at the same time, is everything, all of our returns over our costs, which include variables, uh, just a rudimentary land cost, cash rent of 150, and then our fixed cost. Our returns last year, everything was in the red last year. So we have changed a little bit. We don't have not necessarily a wide margin of profit here, but there is some opportunity with soybeans. But what we did to take a look at this yield, again, trend line yields, what we've seen on average here in Tennessee, and then current harvest price. Current harvest price, this isn't going to be anything that is just eye-opening to producers. It's going to be dependent on your basis as well with this. This doesn't account for that in any situation. And what these numbers are intended to do is to not give you an idea of what your profitability looks like for your farm, but it's to give you just a ballpark because everybody is going to be different when it comes down to their cost structure, what their prices are going to be, what their yields are. This is just to give an idea where Tennessee on average is looking at going. for this harvest season. December futures, looking at this, looking at the numbers, looking at everything that's coming out, I do believe that we've kind of hit our high for December futures, December price when we're looking at this. Still going to stay somewhere around in this. It closed like 463 yesterday. Uh, we might see a little bit of higher price at some point, but I do think that we've hit our high as far as that goes with December futures market. We're going to talk about some price strategies here in just a second. November futures soybean for soybeans. Again, we're playing this tug of war between what the weather's telling us, what we've seen. Again, we pull the needle a little bit, but not a lot here in Tennessee. So they're looking more at those other states, soybean producing states, where they're going. And we're playing this tug of war between what our weather has been telling us, and then also we've got the high crushing demand, our exports with China. We're looking at what's driving these prices, and there's still some room here. I don't think we're going to have too much volatility when it comes to this, but we I still think that we've kind of hit our highs as far as soybean futures as well for the time being. I don't see much of a rally at any point coming up here with harvest. Pricing alternatives, so where we're looking at, we've talked about what the futures markets are saying, what's our expectations for price. Cash contracts, we know that this is pretty much the most popular pricing method for here in Tennessee. If you want to lock in that futures price and your basis for a specific time in the future, this is how you're going to lock in that cash price. If you're interested in locking in a futures price, HTAs is the tool you're going to want to look at. One of the things that I did want to point out with HTAs is that this is not locking in a futures position per se. This is an actual contract. So something that you're not going to have to worry about is the margin requirements for that, that you're actually going to be locking in you're not locking in a position, it's an actual contract when you're locking in that futures price. And then if you want to look at locking in a local basis, a basis contract is something that may want to consider for this. Talking about futures and options, one of the things that I did want to talk about is call options, and I'm going to get a little bit more specific after this slide, but I did take this slide from Aaron's previous presentation that he had, and talking about call options. And what this is going to do is could be particularly important if you don't have a lot of storage or if you don't have any storage on your farming operation. And this allows you, if there's a rally in price, that you can take advantage of that. And what you're looking at here is, again, we've got the strike price, and the call option, if the price goes above this strike price, you've got your premium over here that you would pay. If the futures price goes above this strike price, that's when you benefit from this. Now, one of the things that I do want to point off is that you do have to have an offsetting transaction in the cash market in order to participate in these options, whether put or call. But one of the things that I did want to talk about is an option fence. And this is looking at if you can store corn. This is for March of 2027. And I've got the puts and calls here. And basically, when we're looking at this, is what this is going to do is if you do an option fence with your corn, this is going to give you a price range in the futures market. And what this is going to allow you to do is it's going to, if you do a put, you're going to go a little bit below your strike price of what the futures market is saying. And then if you're going to, you buy a put option with a particular strike price below the current futures price, and then you'll sell a call option with the strike price above the futures price. And so what that does is it's allowing you to give a price range where if the price falls below what you've locked in as the futures price, the put option is going to help protect you. You're going to have your losses in the cash market, but that put option is going to protect your price and the futures market. If the price goes above what you have locked in for that call option, your profits are going to be you're going to have your losses in the cash market, but you're going to benefit from that call option that you've partaken in. So again, it's looking at this, creating this price range. You may offset some of the higher price, but what it does is it essentially helps you lock in that minimum price as well for this corn crop. And the reason why I wanted to point out this corn option fence, particularly for March 2027, is that right now it is premium neutral. And what that means is that if you look here, let me find my numbers here. So for the put option, if you locked in 460 for this as a strike price, and then you did a call option for somewhere around 510. Move my screen so I can see here. 510, you would be able to what you would do is you would be able to offset the premium paid to buy the option from the premium collected selling an option. So it is premium neutral right now. If you can store some corn, you may have an opportunity to participate in this option fence if this is something you're interested in. And I do make this note because we are talking about you're offsetting the premiums you paid since it is premium neutral. There still are transaction fees and finance charges that go along with this. So just because we say they've been offset doesn't mean that you won't be paying something if you participated in this situation. But I did just want to point that out because that is an opportunity, especially if you can store right now. This is something that may be an option for you. And if you do have producers or if they're wanting more information on this, we can get them more information. I probably wouldn't say that I'm the number one, but we can absolutely get more information when it comes to this and helping them if this is something they want to consider. Did want to point this out, AMS, this is price reports. Now, one of the things I do want to point out, depending on if you have a producer in the state, depending on where you're located, is going to depend on how accurate this is. If you're in West Tennessee, this is a really good daily report that comes out that can help producers kind of gauge what prices are. One of the things I do want to point out with this is that make sure they're looking at the delivery time because that is important. Right here, you see we've got current, what we are right now, but then we also have these that are specific time period for it to be delivered. So if they're looking at somewhere in these time ranges, they need to make sure of the price that they are where they're gauging at. Uh, Again, I said if you're in West Tennessee, these reports, they're going to be pretty accurate, spot on for you. However, if you're in southern middle, I know Woodall and Tyson, they have a pretty good set of information for cash price and local basis. So that may be something for southern middle to look at if you have producers that are interested in what current prices are right now. Looking at storage again, thought about putting up Aaron's slide where he looks at all the months where we see the harvest low for storage and what we're receiving and how it goes up for March. But I just again wanted to remind this storage is still a key component in Tennessee marketing strategies. We're still seeing evidence that there is cash improvement from those harvest lows if you can have any option of particularly storing grain at some point and thinking about this. So you do have to, again, whether you're looking at a permanent option, grain bins, or if you're looking at maybe temporary for just this year doing grain bags, it is still an investment, regardless of which one. Investment in money, time, labor, what you're looking at here. And so you do have to evaluate that and make sure that it is right for your farm, for your operation. I know had producers in the past that have considered doing grain bags, but they couldn't do it because of the labor. They didn't have enough help. It is not a one-person job to store grain in grain bags. So again, being able to evaluate what your situation looks like, that's going to be key. But there are benefits for using grain storage as a marketing strategy here in Tennessee. Take home with this, again, wasn't planning on this being very long. that wasn't the goal for this. Wanted to be respectful of your time and everything, but did want to point out those options again. We're waiting for August 12th right now, still pointing to a relatively low price environment. What we're seeing, I mean, we are not where we were last year when it comes to prices, but there is some momentum with soybeans that we're seeing right now. As I've said, kind of playing, I think I keep saying that tug of war between what the weather is saying and then what the demand we keep having from high crushing demand, record demand levels, and also exports kind of ramping back up this year with soybeans in China committing to, as of right now, of new crop, that 5 million metric tons. This is part of that 25 million tons that they committed to buy uh, through 2028. Uh, Evaluate your storage options and your risk management strategies. Again, think about the storage. We just discussed that. Think about those options. Right now, I do think that we are in a place that options may be particularly beneficial for some producers, if that's possible. They do have to have some liquidity with that if they're going to consider doing that, some capital to consider options. But again, there are some things to consider. Cash contracting, again, that most popular method for kind of pricing corn and soybeans here in Tennessee, something that producers really need to start thinking about right now. Probably we should have probably started thinking about it earlier than now, but again, it's never too late to start thinking about this of how we can protect ourselves before we start getting into harvest season.